Hi guys, it's Stock Curry, and today we're going to get away from the cryptos for a little bit and get back to the stock market. We've been talking so much about cryptos lately, a lot of you guys forgot that we're still in the middle of a correction in the stock market. So what's going on right now is, if we look at the SPY, we've now had 2 red weeks in a row. If we look at the Dow, in the last 5 weeks, we've had 4 of those be red. If we look at the NASDAQ, it has had 4 red weeks in a row, and this is possibly the first green week that the NASDAQ will have had in 5 weeks. So both the Dow and the NASDAQ are looking at 4 out of 5 weeks red, and the S&P now has 2 weeks in a row red. The whole entire correction, though, is just starting. This is not a major fast sell-off like we saw in March of 2020 or even March of this year. This is much more of a slower, prolonged sell-off, what we have historically seen during corrections. And so the S&P right now is down about 1.5% from highs. The Dow is down about 3% from highs, and the NASDAQ is down about 4.5% from highs. So none of them have actually entered correction territory yet. I still think they all have a lot more room to fall before we finally get into correction territory. And if we look at how long a correction typically lasts, outside of the flash corrections that we had in March, they typically last about 3 to 4 months. And so if the correction started, say, 4 or 5 weeks ago, that would have put us in the middle of April. Then we're talking the middle of May, middle of June, middle of July, maybe end of July. So I think the overall stock market correction is probably going to last through the middle to end of July. However, there are some sectors of the economy that have been completely beat down that are showing signs of rebounding. Now, they're at key critical support levels right now, well, now resistance levels. And so we have to look to see, are these things going to break above their resistance levels, or are they going to bounce and keep going back down? And we don't know. And the biggest sector of all, by far, is high growth stocks. So we got to look at that. I will also let you know that Tom Nash took a little bit closer look at Michael Burry's other plays. We talked about how Michael Burry, the guy from The Big Short, how he had that short on Tesla that pretty much probably most likely is already over, but he probably made a lot of money off of that. However, there were a couple other things he did too. And one of those is that he shorted the 20-year bonds, which basically means he was expecting higher inflation, higher interest rates, which of course we saw. And the other thing that he did, though, and this is interesting, is he went long on a couple of things. He went long on transportation, specifically the shipping industry. He went long on the energy sector, and he went long on some pharmaceuticals. And I don't think it's any surprise that we've already seen energy and pharmaceuticals go up. So the other one that we have not yet talked about, and I want to briefly mention it, is the transportation industry. Now, when it comes to transportation, he really focused on the shipping industry. And of course, there is one shipping stock that we've talked about quite a bit on this channel, and that is CTRM. CTRM looks like it might start to become profitable again very soon. If not this quarter, then probably next. And of course, shorts, it's very heavily shorted. However, I think that as it starts to go to profitability, as we see revenues absolutely explode now that they've got way more ships than they did a few months ago, I think we're going to see shorts having to start cover on CTRM, and I think we're going to see CTRM start going back up. So for all this time that you have been waiting and holding off, I think you might want to reconsider maybe buying back into CTRM or dollar cost averaging down. I think CTRM is ripe for a rebound. And so the other thing, of course, energy stocks. My energy stocks have done quite well. Even though they pulled back a little bit during this correction, I'm still up about 5 and 10% on those. The financial stocks continue to do well, up about 10-15% on those. Gold, I'm still up 5% on. Gold is another one I want to talk about real fast because I did a lot of research into the historical gold prices. I mentioned it the other day, and then a lot of you guys were asking about gold and how you could invest. So what I wanted to do today, before I mention it too much, because I know I got some influence here, I wanted to go back and look at the history. And specifically, I went back and I looked at the period from the late 1970s and early 1980s. And the reason that period was of interest to me is because that is when we had the highest inflation in this country of all time. And one thing that's happening right now, of course, is high inflation. In fact, possibly double-digit inflation like we have not seen since the late 1970s and early 1980s. And so to me, that was an interesting time period. I wanted to see what gold did during that time. And what I found was kind of interesting and kind of scratched my head and made me look further. I found that gold absolutely skyrocketed in the latter half of the 1970s, but then starting in 1980, gold actually came down. While the inflation rates in the United States were at their highest, gold was going down. And so I found that kind of curious. And then I went to go look at the period going into like 2008. And what I noticed is that gold started going up in 2007 before we had the entire sort of market crash. And then it started going back down again in 2008. And I was like, okay, what is going on? Why is it that gold is going up before the stock market goes down, and then gold goes down like you put it as 6 months to a year before the stock market starts going back up? It's almost like gold can completely predict the stock market overall. And so then I noticed another interesting thing, and that is in the 2009 period, pretty much from 2009 to 2012, gold had a massive, massive bull run. I mean, you could have made a ton of money during that time period. And so it was up like 300%, massive, massive amounts. And so I'm looking at that and I was like, wow. So what happened starting in 2009, going all the way through 2012 and then ending in 2012? Well, as I remember it, it was what we called QE, quantitative easing. And it was when the whole world was in this major financial crisis, and countries such as the United States and the UK and many others started just printing money like crazy. They started just printing money and spending money, and gold went up. And then I went to go look at the period last year in 2020. What's amazing is starting in 2019, about the middle of 2019, going all the way through 2020, gold had another bull run, and it went up massively. You could have made 50 to 100% on gold last year. And so I noticed two things. Number one is that when people start predicting higher inflation rates, and really it has to do with the bond markets. The bond markets can predict this a lot better than the stock market can. So when that starts to happen and you start to see inflation might go up, gold starts going up way early, and it continues to go up. But usually about a year before people think inflation might, say, top out, you see gold start to go down. And it's really, I think the people that are buying gold really are forward thinking, and they understand inflation and prices and all this stuff. And I think, again, it has a lot more to do with the bond market than the stock market. But just follow me here for a second. So what I'm more interested in is the period from 2009 to 2012, where we had this big run, and then the period from the end of 2019 through 2020, we had another run up. And what I see is whenever the Fed starts printing money, or whenever people think the Fed might need to start printing money, that's when you see gold run up again. So the question for us as whether or not we are going to invest in gold is, number one, do we see the Fed spending more, printing more money? Do we see Democrats spending more money? That's the first question. I just say Democrats because Democrats control Congress and the president right now. So, but I just mean Congress in general. Will Congress spend a lot of money, and will inflation rates continue to rise? And if either one of those is true, forward thinking, say over the next 6 months to a year, then we can expect gold to go up. And what we actually have found is that in the last few months, gold has started to go back up again. Now, we're at a very critical level right now. We're actually, the chart looks almost identical to where it was when it topped out in 2012. So I'm very concerned technically about gold and whether it will actually start going back down from here. We may have topped out, it might start going back down. So I'm not really sure what's going to happen with it. I'm not a big gold investor. It's not something that I have spent a lot of time on. I need to do more research, but technically it is alarming. Gold is actually getting overbought, and the chart is almost identical to what it was, like I said, at the very top of 2012. So that concerns me. But the other thing is, if the Fed continues to print money, if Congress continues to spend money, and they're talking about another $1.8 trillion stimulus, they're talking about a fourth and fifth stimulus bill to U.S. residents. So if this happens, then we could see gold continue to rise. And I think that the $2,000 level on gold is going to be a key psychological level. We did break it last year a little bit. It went to about 2,050 and then came back down. But if we break it and get above it, we start getting to like 2,100, start reaching new all-time highs, I think psychologically that could cause people to start talking about it a lot more and could cause people to dump money into it. And so that's the big unknown. But I want to warn you that just because you think inflation is going to go up, or just because you think Congress is going to spend more money that they don't have, it's going to cause the Fed to have to print money. If you think those things are going to happen, the one thing I've noticed about gold is you have to look at it a year forward. So it's not, do you think they're going to do it now or 6 months from now? It's, do you think these things are going to happen a year from now and 2 years from now? That is what actually causes gold to go up. It appears to be a forward-looking asset that's about 1 year in the future, which is amazing and mind-boggling to me that it's that forward-thinking, but it is, and it like perfectly times everything. Although I have heard it said, and it is true, anybody that's worked in investment banking knows this to be a fact, that the thing that controls the stock market is actually the bond market. So it actually makes sense that the bond market would also control gold. And so I think ultimately we got to look at the bond market to figure out what's really going on. So I'm cautious on gold. It's possible we may have missed the boat. We should have been doing this 6 months ago. But it's also possible that we could have another run up. Okay, the second thing I want to talk about with gold real fast, just so I can teach you guys and show you guys what I learned today as I was researching it, is that there's a lot of different ways of buying gold. First of all, you can buy gold bullion if you're really interested in that, gold or silver. The website that I buy bullion from that I recommend is jmbullion.com. jmbullion.com has the lowest prices and fees of any of the gold or silver brokers out there. That's why I use them. The other ways you can do futures, but futures are extremely risky, and I'm not even going to get into that. Another way that you can do it is through ETFs. ETFs, there's a one-time leverage ETF called GLD, and there's a two-times leverage ETF called UGL. UGL is what I am currently invested in. And the fourth way that you can do it is by buying gold mining companies. Now, here's what I found that was really interesting about gold mining companies, is that gold mining companies tend to about 2 to 3 times faster moves than gold itself. And so let's say gold goes up 20%, a gold mining company might go up 40 or 50%. But here's the risk. If gold goes down 20%, that same gold mining company also goes down 40 to 50%. And so that's what I noticed. So I think as investors, as a part of this channel, that the best way without taking on too much risk by doing futures is actually to invest in gold mining companies. The gold mining companies tend to profit the most and have the highest share price increases when gold goes up. So the question, of course, is will gold go up, or have we topped out and we're going to start going back down? I don't know. That's something you might want to look into for yourself. But if you do decide to invest in gold, you might want to consider a gold mining company to maximize your profits. All right, that covers what I wanted to talk about there. Let's get into today's stock and crypto picks. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I give you both the cliff notes from the top 10 YouTubers, as well as my analysis on their stock picks. If anything I talk about today piques your interest, make sure you listen to who I say talked about that stock or crypto, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, click the bell icon, and then click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get into today's stock and crypto picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $1,850, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $1,850. Alright, let's get into today's stock and crypto picks. First up is ADA. This is Cardano. StockMo showed us how ADA is rebounding better than most of the other cryptocurrencies. ADA is up over 70% from its lows yesterday, while Ethereum is only up 50% from its lows, and Bitcoin is only up 35% from its lows. Long story short, I'm very happy that I moved my money from Dogecoin to Cardano. That trade is working out quite well for me. Larry Jones also converted his other cryptos into ADA. The only 2 coins Larry Jones now owns are ADA and MATIC. And by the way, MATIC is the only altcoin I follow that performed better than ADA after the crash. I still think the altcoins are going to outperform Bitcoin and Ethereum in the long run, and I do believe ADA is the best altcoin to own, especially since it is proof of stake already. And just for your consideration, other proof of stake altcoins include EOS, ticker EOS, Tron, ticker TRX, and Tezos, ticker XTZ. Unfortunately, none of those are available on Webull yet, so in the meantime, you can buy them on Crypto.com. I prefer Crypto.com over Coinbase for buying crypto because the fees are much lower. If you'd like to check out Crypto.com, I have a link for it as well as a promotion for $25 in free crypto on my promotions page. I have a link for my promotions page in the description of this video. Next up is ETH. This is Ethereum. StockMo said he's been adding on to ETH throughout this most recent dip. We did have another dip today as the IRS came out and said that they needed to be notified on any crypto transactions over $10,000. That $10,000 amount is already standard for banks across the United States. It's part of the United States anti-money laundering measures. This is also a necessary step to get crypto ETFs listed on U.S. exchanges. Also, Larry Jones said that once the most recent sell-off stabilizes, he plans to move his money back into ETH. I also plan to buy ETH at some point once I feel like ETH is steadied out. I have cash ready to go, but I haven't pulled the trigger yet. As you can see on this chart, ETH is still in a downtrend. I think it might get as high as $3,000 before it continues to go back down. Next up is ABNB. This is Airbnb. StockMo let us know that the lockup expiration has occurred on ABNB. That could put downward pressure on the stock price over the next few days and weeks. When a company IPOs, insiders, including employees and many early investors, are not allowed to sell shares for a certain period after a stock IPOs. This is designed to help keep a stock's price up and prevent an overburden of selling pressure on a stock as soon as it IPOs. ABNB had its lockup expiration on Monday. The stock already sold off in the past 2 weeks in anticipation of the lockup expiration, but this can provide a buying opportunity for long-term investors. Next up is AMC. This is AMC Movie Theaters. Keenan Grace reviewed AMC again today. He talked about another short seller hit piece that was released on MarketWatch on Tuesday. The next day, AMC dropped 10%. But there was another article that came out on Tuesday also showing how short sellers lost nearly $1 billion in the past week as AMC and GME rose up. So the timing makes sense. Short sellers lose money because their bets go the wrong way, and in turn they release news articles telling people to sell the stock so that they can recover their losses. That's the manipulation game they play. Now personally, I do not think AMC will short squeeze. I do believe that the 18% short interest that Ortex is reporting is in fact accurate. And I also see signs that shorts continue to cover. The failure to delivers continue to drop, the number of shares available to short continues to rise, and the short borrow fee continues to drop as well. All three of those are signs that shorts are covering. Typically, I like to find stocks with greater than a 30% short interest for possible short squeezes. And AMC is only at an 18% short interest. In fact, there are over 150 companies with a higher short interest than AMC. If you want to see that, in the description of this video under the resources section, I have a link to FinViz, which is a free stock screener, amongst other things. All you have to do is click this link, and then click Screener, and then on the screener go down to Ownership, and then go over to Float Short and click this twice to sort by descending. And here you're going to have a list of all of the stocks that have high short interest. As you can see, there are a ton of great stocks that are heavily shorted, far more than AMC is. Stocks like LAZR, IPOE, OTRK, BLNK, WKHS, TTCF, CLOV, SENS. These are all stocks that we've talked about on this channel. Using this free screener is how I found stocks like SKT and GOGO that I made quite a bit of good money on while everything else was crashing. So I guess what I'm trying to say is, don't get married to any one stock. Constantly be on the lookout for stocks that are best for you to invest in, and don't just buy stocks because a bunch of people on Reddit or YouTube are talking about them. Also, if this whole thing is too much work for you, in the description of this video I also have a high short interest stocks, which is just a list of the same thing. The only downside of this list is that they only update about once a month. So this list can get kind of outdated at times. FinViz is definitely better, but if it's too much work, you can just use highshortinterest.com. Now, all of that said, Keen and Grace actually did a great job explaining how shorts use the media to manipulate the markets. So if you're interested in one way market manipulation works, then I recommend you go watch Keen and Grace's video that he uploaded Thursday. Next up is COIN. This is Coinbase. This is a platform that is used to trade cryptocurrencies. StockMo said that if so many people were using Coinbase over the past few days that it crashed their servers, then surely that means that they were making a ton of money. StockMo thinks that means COIN will report another great earnings next quarter, and I completely agree. The chart is still bearish though, so I would not be surprised to see COIN fall again once it gets back up to about the 10-day or 21-day EMAs. Next up is CPSH. This is CPS Technologies. They are a composite metal manufacturer used in naval ships and space vehicles. Dead Inside let us know that CPSH just announced a new order from the US military for their hybrid tech armor panels. These panels are used to protect the sides of US aircraft carriers. CPSH was up over 10% today on that news. It did bounce off of the resistance level of $7.50 though, so we'll have to see if CPSH is able to rebound or if it will continue falling. The RSI and MACD are rising, and CPSH did close above the 10-day and 300-day EMAs. So we do have quite a bit of bullishness on the technicals. And unlike a lot of other high-growth stocks, CPSH is actually profitable, reporting a 7-cent per earnings share last year. And with the new contracts that they just received, CPSH might beat that handsomely this year. The downside risk is that due to the current supply chain issues, the cost of metals, which are raw materials for CPSH, have risen significantly. This will cause CPSH's costs to rise, which in turn might cut into their profits if they are unable to pass along those costs to their customers. The upside is that they have only received 2 orders so far, so this is just the beginning for CPSH. This is a new company with a potential for massive growth as they receive more and more contracts. The share price currently gives CPSH a PE ratio of about 260, which is reasonable for a company with this amount of future growth potential. So while I think CPSH is priced at fair value right now, as they receive more and more contracts, the share price should rise. Keep in mind that the 2 contracts that CPSH has received so far have not yet been included in their quarterly numbers. And today's order is worth more than their entire revenues last quarter. So given the current growth in revenue and future growth potential, I will give you a 1-year price target of $13.50. That represents a 104% upside potential from Thursday's closing price. If you'd like to know more about the new contract that CPSH just received, you can go watch Dead Inside's video that he uploaded Thursday. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. NIO has continued to rebound after bouncing off of the 300-day EMA, and StockMo reiterated that he believes NIO will get to between $37 and $38 a share by the end of next week. The chart remains quite bullish, and it looks like StockMo is correct on his short-term price target. Next up is PLTR. This is Palantir. They're a data analytics company. ZipTrader was concerned because despite the market being up massively today, PLTR was down. So is that a sign of bearishness on PLTR? Well, I'm actually going to recommend that you go watch ZipTrader's video to get the answer to that question, because ZipTrader did a really good job considering the psychological reasons behind PLTR's current share price and some of the reasons why PLTR is still not profitable and probably won't be for some time as it continues to grow. ZipTrader also used price to sales to come up with a price target for PLTR. I think there are better valuation methods than price to sales, but that is a simple one that can help us come up with a quick understanding of if a company might be undervalued or overvalued. If you just want a quick recap and don't want to go watch ZipTrader's full video, I will let you know that ZipTrader determined that the current price of PLTR is correct and that it is neither undervalued or overvalued. I will remind you that I expect PLTR to trade in a range of $20 to $24 in the time being. Finally, we have XPEV. This is XPeng. They're a Chinese EV manufacturer. StockMo believes the EV crash has ended and that we are now rebounding. StockMo has continued to buy XPEV through the crash and has added on to his position. XPEV came out and said that they believe the chip shortage will be over in the next 90 days or so. This chart is very bullish right now, but it does remain below the 300-day EMA. So we'll have to wait and see if this is a dead cat bounce or if it is the start of a longer uptrend. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your thoughts are on gold. And if you want to call me a boomer, fine. I just want to let you know I'm not a boomer. I'm actually Gen X, so stop it. You can actually make a lot of money from gold. I'm trying to help you guys out here. Come on. Also, if you guys want to get some free stocks, sign up for Webull using my link in the description below. When you sign up and deposit just $100, Webull's going to send you 2 free stocks worth up to $1,850. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you in a live video at some point very soon.